at Care Ratings. Joining us in a bit, we'll also have Aditi Nayar of ICRA. Madan, core sector, does it show decent recovery, or would you still wait to say that?
No, I think it does show some kind of a recovery, and I would actually have said that we've had this advantage of a negative base year effect, which has actually led to such good numbers. But given the fact that we've had lockdowns even in the current financial year, for April, May, June, so therefore I would look at it a little more positively. Of course, to see whether this really translates into higher industrial growth for the entire sector, which here we're just talking of these 8 specific sectors, would still be a matter of conjecture. We'll be getting high numbers for IIP, I'm quite sure, in the region of around 15 to 20% for the month of June. But we may probably have to wait till September, October, where we get more reasonable numbers to compare. But on the whole, we should also put this particular number in juxtaposition with the fiscal numbers which came out. And I think there I noticed that the government had spent slightly lower amount of its budget on capex this year. So notwithstanding that, we have still seen steel do very well. I think it's 25%.
Yes.
The cement, of course, have been a bit lower at 4.3%. So there's probably been some bit of activity also in the private sector.
But there's no taking away the fact that steel is a standout performer, even if you take April-June core sector, or only if you take June performance. Steel is absolutely stunning in terms of its performance, and that, I guess, is also the case if you looked at the way steel companies are reporting numbers. On the issue of capex, Madan, it is 1.11 lakh crore compared to 0.88, or that is 88,000 crore last year. So I still think it's not bad. And if you compare it to even the year ago, if you say last year is abnormal, and look at 1920, capex was only 63,000 crore. So I don't know, I wouldn't be that worried about the capex expenditure of 1.11 lakh crore. The other thing that stood out for me is tax revenue. Total tax revenue is 4.13 lakh crore in April, May, June. And last year it was only 1.3 lakh crore. Okay, last year was a terrible year. What about the year before? It was 2.5 lakh crore. Either way, I think tax revenue collections are very good. And if you look at only corporate tax, that is where the government is really struck gold, which means corporates are doing very well. Corporate tax collection is 1.24 lakh crore compared to 54,000 crore last year and 70,000 crore the year before. So there is clearly a steep curve in terms of a rising tax collection for the government. Well, Aditi Nayar, any thoughts on the tax collections and the fiscal numbers?
Thanks, Lata. Absolutely, I agree with you. The tax numbers are very good, both in terms of the direct and the indirect taxes. In fact, excise and customs duty collections have shown a very healthy percentage of the budgeted target already having been completed in Q1 itself. And even overall, if we look at how much tax has been raised in Q1, it's about 24% of the full year budgeted target. It is very good for a first quarter of any fiscal year, which tends to be the smallest proportionately. So the tax side is clearly giving very good signals. Expenditure is a little bit mixed, and it's absolutely flat if we take revenue and capital together. So that is something which is going to be a little bit of a dampener as far as the Q1 GDP number is concerned. We're hoping to see a better pickup in June in terms of the central government spending, but it's been a muted improvement.
Okay, spending, I think total expenditure is 8.2 lakh crore compared to 8.16 lakh crore last year. But last year we were doing a lot of food transfers. I mean, last year we were under severe lockdown. 8.22, okay, compared to last year would look like it is not an improvement. Madan, finally, would you say that, are you also equally impressed by the tax collection? And would you say this time, if there is any strain on the fisc, that will come because of maybe divestment disappointments, but tax cannot be a disappointment. Tax looks like a super performance. What say?
No, I think I agree with you out there, because we should remember that, again, this particular quarter was the quarter of lockdown. So we did expect that the people were not able to spend, their GST collections would be lower, excise collections will be lower. But as you mentioned, I think all the categories of taxes have more than doubled compared to last year, which means that definitely the impact of the lockdown was being less sharp than what it was last year. So on the revenue side, there's no problem. I think the issue will be more on disinvestment, as you have mentioned. And I think if you look at non-tax revenue, I think the RBI surplus transfer has also helped. I think a large part of that has gone into that. I think that's also helped a lot. So I think this time managing the fiscal will be definitely less taxing for the government compared to last year.
Okay. Well, we'll leave it at that. On core sector, if you looked at both April, May, June and compared it, last month, the same quarter, we were minus 23. Now we are plus 25 if you took the April to June performance. So core sector we are almost static, but recovery is still there. The sterling number that is coming out of the macro numbers that were announced today is quite clearly tax collection. Aditi has a point that they could have spent more, maybe the government, but aside from that minor complaint, capital expenditure has been decent at 1.1 lakh crore, 1.11 lakh crore compared to only 88,000 crore last year and 63,000 crore year before. Capex is good and tax collection, corporate tax collection in particular, is superb. So that's a silver lining, definitely, from the macroeconomic front. Back to you, Ritu.
All right, Lada, thank you so much for taking us through those important macro numbers. But we'll take a very short break on that note. Don't go anywhere. We're back in 2 minutes with more news and updates.